I tell you guys all the time that it's in the way that you look at these charts. We're all going to look at charts differently. We're all going to perceive things differently, and we're all going to receive information differently. Well, I've been a content creator on YouTube here for, I think I'm, 18, 19, 20, 21. I'm about to hit my 4th year of being a content creator on YouTube. I've put out well over total 1,000 videos, so I know all the information that I've put out there, but I do not know what information you have received. When it comes to looking at these charts and looking for stocks that like to run, you've heard me say multiple times that a lot of your retail traders out here, they're all taught to look for stocks that are hitting highs, or they all come into this and they are all naturally buying at high of day or when stocks are at highs. And when you look at these charts, when a stock's in a clear uptrend and it's just making high after high after high, I mean, look at GameStop here, for example, and we're looking at a 10-minute chart. Notice every high that this stock made, all here with this run up, how much volume just kept increasing and increasing and increasing and increasing. All that volume flooding into this stock when it's performing and it's making high after high after high after high after high. But then once the stock stops performing and it's not going any higher, and then once we start making all of these lower lows, lower highs, and we just keep going lower and lower and lower and lower, look at how volume just dries up because people move on to other stocks. They move on to other stocks that are performing. And now look at that little rebound there with the little volume spike. And then even with this recent run up here, look at how that volume came back and pushed into it. That's why I love that saying. You want to be looking at volume as if they're seagulls. They're gonna run after whatever stock is running up. Now for today, we've had multiple stocks run up to new highs for the day. Let's look at the number one example, SIGA. Now on Friday, we'll look at this 1-minute chart here. Notice how we'll go back to Thursday right here. The stock starts to perk up and get some activity and start trending up right here, and it catches a few eyeballs and attention with the volume activity going on here. Then going into the next day, we're still trending up. Now we're in a very, very steep trend, and look at all of this volume show up in on this stock. That's a pretty drastic change in volume from this day right here compared to just 2 days ago when the volume was trading like that. That's that supply and demand effect going on. SIGA, the float on this is 40 million. It's in an obvious trend to the upside because everybody's taught to plot on trend lines just by simply connecting all of the higher lows. This stock just kept trending up higher and higher and higher. Nobody's really had a reason to sell. Nobody. Everybody keeps buying at the trend and running it up higher and higher. And this falls into our euphoric chart video that I just made. Whenever you spot a stock that's been trending for some time, watch out for the stock to get that euphoric explosion, which in a way is like the grand finale, and then everybody dumps it and the stock crashes down. The stock really starts to get that euphoric explosion right here from $12.50, explodes up to almost $15, and then when it pulls back, it's fighting to hold on to that trend all right here. But then once people start to realize that it's not performing and pushing up to new highs, that's when everybody starts dumping it. And look at where the stock's at. The next day, it's down in the gutter. Just the previous day, it was at high at $15. Now it's down to 11. And look at volume shrink on it. let's really zoom in on this. This was the #1 performing stock on Friday. Then the weekend goes by, and now it's actually Tuesday because Monday was Memorial Day. So the markets were closed Saturday, Sunday, Monday. Going into this day here, we're gapping down and we're pushing down lower. Look at volume retrace on this and look at the volume difference from all of this nonstop volume here on this day to how much volume has decreased on this day. And then once it gets that explosion, it starts to trend back up. All of this volume comes right back into it, and people want to catch it because people are like seagulls in the stock market. They're always going to be jumping from stock to stock. They're going to be jumping from stocks that are performing and pushing up higher on the day. It's all in the way you look at it. And you need to train yourself and train your eyes to look at these charts and study human behavior, because we do see patterns play out over and over and over.